The next problem in your set of practice problems for the final exam is preparing closing entries. So you may recall that part of the accounting cycle is closing the books, right? So after you prepare the financial statements, then you close out the revenues and the expenses and the dividends in order to move the account balances to retained earnings, right? See, these are zero, but we'd want them to have our new retained earnings. And it cleans out the revenues and expenses to zero, so that way you can start over for the next year. So we use a temporary account called income summary. Maybe you remember that, the temporary account named income summary. And we close the revenues and the expenses to income summary. We close income summary to retained earnings, and then we close dividends to retained earnings. So it's 4 steps basically: close revenues, close expenses, close income summary, close dividends. And then at the end, your retained earnings will have the new retained earnings balance that matches what you calculated on your retained earnings statement. And these will be all zeroed out. Along with the temporary account, it'll be zeroed out too. So we start with a journal, right? So I've got my journal page here. And I need to take these balances. So of course, if what I'm doing is closing dividends, revenues, and expenses, I don't really need any of this other stuff up here, right? So don't use any of this. We want these to keep their balance, right? These are balance sheet accounts. The balance sheet accounts carry a balance over to the next year. So don't try to close any of the balance sheet accounts. You're only closing dividends, revenues, and expenses. Okay, so the first thing we close typically are the revenues. So what's the date on this? December 31. So on 12/31, revenues carry a credit balance. So obviously to zero them out, we need to debit them. So service revenue, and you do just whatever the balance is, $38.75, and you have to have a credit, so because debits always have to equal credit, so we're going to credit that account I talked about, income summary. Okay, and there you go. So now service revenue would have a zero balance, and income summary would have a credit balance of $38.75. Next, we're going to close the expenses. All right, and we close them to income summary. So clearly, to close expenses, we need to do credits, right? So that means we'd have to debit income summary. Okay, I'm not sure how much that is right now. I need to add up all my expenses. So let's just put our expenses each down and close them. So you have to do each one separately. You can't just go expenses, right? Because you're zeroing out each account. So each account needs a credit. So rent expense needs a $1,600 credit. Utilities expense needs a $240 credit. $240. And what else? Interest, $150. $150, and I'm crediting them all because they right now have debit balances. Office supplies expense, $75. And miscellaneous expense, $75. Alright, so now I'm going to add these all up. So 1,600 plus 240 plus 150 plus 75 plus 75 equals 1,735, I'm sorry, equals $2,140. Alright, so 2140. That's what we're going to debit to income summary, so that way our debits equal our credits. Alright, so we've closed the revenues, and we've closed the expenses. Now, income summary has a balance, right? So we got to close it out. And its balance is a credit balance, right? Because credits are bigger than debits, right? So right now, if you take 3875 minus 2140, you come up with 1735, right? That's the difference. 3875 minus 2140 is 1735, and that's what we need to debit to zero out income summary. So our next transaction is income summary, 1735 debit, and we're going to credit retained earnings. And this is how the retained earnings balance actually changes, right? Because that's net income. Think about it. Revenue minus expenses equals net income. All right, and we've moved that net income amount into retained earnings. The last closing entry is to close the dividends if we have them. I suppose it's possible you wouldn't have any, but in this case we had 500, and you just close them directly to retained earnings. Now take a note. These are debit, so that means you're going to credit dividends and debit retained earnings. Retained earnings, right? Because this is a equity account. We're decreasing it by the amount of the retained earnings, right? So 500 and dividends 500, and that's it. You did all the closing journal entries. We closed service revenue to income summary. We closed expenses to income summary. We closed the balance of income summary, which is nothing more than revenues minus expenses, or what we call net income. And finally, we closed dividends.